Wells Fargo is what a lot of people call a super regional. They have a balance sheet that's more than $1 trillion, so I'm not sure they're a regional anymore. But calling them that is, or referring to them that way gives you a little bit of a window into their business model. It's mainly about taking in deposits and making loans for them. As you mentioned, they are the #1 home lender in the U.S. and they do a lot of business lending and a lot of consumer lending too. So, Citigroup, J.P. Morgan, other banks like that rely a bit more on their investment banking operations, and Wells Fargo is kind of the biggest, plain vanilla commercial bank in the U.S.
Now, plain vanilla, from what I can tell, has been good for Wells Fargo's business. Is it going to continue to be as good for Wells Fargo's business? We're told that if the economy accelerates, it's going to be great for Wall Street.
Yeah, if the economy accelerates, it will be good for Wells Fargo as well. They are facing some challenges now. You saw in the fourth quarter their net interest margin, which is a measure of how much they make on loans, declined 10 basis points or so. So that has called into question, whether they can still make good money in this interest rate environment on lending, and which is kind of their bread and butter.
That said, though, the net interest margin was more than 3.5%. Even if it is dropping, it's still way more than any other bank of that size in America is reporting. Surely that counts for something.
I think it does, yeah, for sure. It gives them a little bit more room than a lot of other banks.
So what about the thing that we discussed with Scarlett Fu just a few minutes ago, this widening gap between the amount of loans that Wells Fargo is making and the amount of deposits that it's pulling in? In theory, a bank wants to be able to put more of those deposits to work in loans. Why can't Wells Fargo find people or companies to lend to?
It's a good question. They are obviously trying very hard to, but the trouble can be seen in the last 2 quarters. They put about $10 billion in mortgages onto their balance sheet at 3%, a little north of 3%. That is not what they want to be doing. They want to be lending to consumers through credit cards. They want to be lending to small businesses. And they are out there looking for loans, and the tepid economic growth is making it hard for them to find borrowers.
Take us inside the mind of John Stumpf, the CEO. How is the way that he looks at the world different from, let's say, the way that a Lloyd Blankfein looks at the world?
That's a good question. That may be one only John can answer, but I think John Stumpf looks at the country as, he's got a huge branch network. He just wants customers to use more of the bank's products. They talk a lot about cross-sell. Banks in general talk a lot about cross-sell, but Wells has kind of been doing it better than a lot of folks for a long time. And so, when you go to John Stumpf and ask him, hey, is this business, one that you really want to expand? Are you worried about rankings? He says, hey, I don't care. If this business grows, that's great. If another business grows because that's what my customers want, that's great too.
Did you perceive, Dakin, any concern, any degree of worry on the part of Wells Fargo about the mortgage numbers? We've been showing them to people. Maybe we can pull them up again. Applications are dropping. The pipeline's getting smaller. Originations are down. This is, to a degree, a big part of their bread and butter, isn't it?
It is. And so far, they've put on a very good face. A couple quarters ago, they used a presentation to show how many of their customers could still need refinancing. They showed loan-to-value ratios and credit metrics, and they used that to show that, hey, there's been a lot of talk about this refinancing wave that we've been in coming to an end, and Wells Fargo would really like us to believe that they still have tons and tons more borrowers that need to be refinanced. And so, any drop in mortgage activity isn't going to be as bad as many people think. because of these numbers. And the numbers in the fourth quarter show that perhaps that's not the case. Perhaps they may have some trouble ahead and some difficulty continuing to grow that business.